Hey there, financial adventurers. Welcome back to the channel where we dive deep into the fascinating world of market mechanics. Today, we're spotlighting a truly unique situation that popped up on our hard-to-borrow screener, AZI Internet Technology Global Limited, ticker symbol AZI. We're going to break down exactly what makes this stock intriguing from a short squeeze perspective. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on AZI. AZI Internet Technology Global Limited operates in the consumer cyclical sector, specifically within auto and truck dealerships, primarily in the People's Republic of China. This is a small cap company with a market capitalization hovering around $5.07 million. AZI is involved in providing automotive products and services through both online and offline channels, including new car sales, auto parts, accessories, and even automotive insurance-related services. Show company logo/sector info. Looking at recent price action, AZI saw a significant drop today, down 15.45%. Over the last 5 trading days, it's flat at 0.0% change, but zoom out to the last 30 days, and you'll see a substantial gain of 40.91%. Volume-wise, today AZI traded about 291,500 shares, which is dramatically below its 30-day average volume of 12.6 million shares. That's an incredibly low relative volume day. Show our AZI chart daily/30 day. What is cost to borrow and why it matters. So, what does it mean when a stock is hard to borrow? It means there's a scarcity of shares available for short sellers to borrow, and the scarcity drives up the price for borrowing them. This price is called the cost to borrow, or CTB, and it's expressed as an annualized fee. For short sellers, this is a direct, ongoing expense, and it matters because it eats into their potential profits or rapidly magnifies their losses. Why can these fees exceed 100% annually? Well, just like any market, when demand to borrow is extremely high and supply is extremely low, the price skyrockets. These are annualized rates, so even a daily fee of a couple of percentage points can quickly compound to hundreds of percent over a year. Why this stock is hard to borrow right now. Now, let's look at AZI through this lens. Our screener flagged AZI Internet Technology Global Limited with an astronomical annualized cost to borrow fee of 634.0%. Highlight CTB number, that's not a typo, 634%. What's even more striking is the momentum. This CTB fee has surged by an additional 54 percentage points in just the last 5 trading days, indicating rapidly increasing demand or decreasing supply. Show CTB momentum. The shares currently available to borrow are incredibly scarce, standing at a mere 20,000 shares. To put that in perspective, AZI has an estimated float of 4.4 million shares. A borrowing supply of only 20,000 against a 4.4 million share float, combined with the 634% CTB, tells a clear story of extreme scarcity for short in this specific stock. Our internal composite squeeze score, which factors in all these elements plus technicals, currently places AZI at a 49.9 out of 100, indicating a moderate but certainly not extreme squeeze potential. Squeeze mechanics explained. For those new to the concept, a short squeeze happens when a heavily shorted stock rapidly increases in price, forcing short sellers to buy back shares to limit their losses. This forced buying creates a feedback loop. As shorts buy, the price goes up further, triggering more shorts to cover, which pushes the price even higher. When a stock like AZI has an extremely high cost to borrow, it puts immense pressure on those short sellers. Every day they hold their short position, they're paying that eye-watering 634% annualized fee. If AZI share price were to suddenly climb, perhaps with a surge in volume, remember today's volume was very low, and the available borrowable shares stay at 20,000 or shrink further, it could trigger a frantic scramble among short sellers to close their positions, leading to that classic squeeze scenario. Dilution risk check. One crucial factor to consider when evaluating any potential squeeze candidate is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can reduce the value of existing shares. For a short squeeze thesis, dilution is often a major killer. If a company issues new shares, it can provide liquidity for short sellers to cover their positions without impacting the price much, or simply flood the market with supply, negating the upward pressure from short covering. In the case of AZI, we found no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. We also found no recent reverse splits in our look-back window, which is often another form of capital restructuring that can impact a stock's dynamics. This absence of recent dilutive events is a positive sign for the squeeze thesis, as it removes one significant hurdle. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. It's vital to remember that a high cost to borrow, even one as extreme as AZI 634%, does not guarantee a squeeze. Short sellers are paying that fee for a reason, likely because they have strong conviction that the stock price will eventually decline. They're willing to pay to stay short. So, what should we watch for with AZI? Keep an eye on the borrow rates and available shares. Will that 20,000 supply dwindle even further? Pay close attention to volume. Today's volume was extremely low, so a significant increase could signal a shift. Price momentum is also key. While done today, AZI was up over 40% in the last month. Watch if that upward trend resumes. Any sudden positive catalysts for AZI Internet Technology Global Limited, perhaps company news or sector-specific developments for Chinese auto dealerships, could be the spark. So there you have it, an in-depth look at AZI Internet Technology Global Limited (AZI) and why its incredible 634% cost to borrow fee and scarce borrowable shares have placed it firmly on our hard-to-borrow radar. Remember, this is an educational exploration into market mechanics, not a recommendation. Always do your own thorough due diligence. If you found this breakdown helpful, please hit that like button, subscribe for more unique stock insights, and let us know in the comments what hard-to-borrow stocks you're watching.